first of all, what we would like to know is about the overall view on your numbers, what you have given, and margins look a little bit dented because of your high ad spend. How would you like to explain it?
Yeah, so the Q3 overall performance has been good. Revenue has been growing. Revenue has grown by around 13% on a console level, and the PAT has been growing in the range of 10%. And India, if you look at our PAT growth, is more than the revenue growth. And when it comes to EBITDA margin, actually it is not comparable because in the Q3 of last year, we did not have any franchised store. This Q3, we have franchise stores. We have 6 of them. And franchise comes with a lesser gross margin because we work on a FOCO model. And over and above that, we have some pre-operative expenses which has come in Q3 because we are planning to open 20 new showrooms before Akshaya Tritiya, and we have hired many employees. Training is happening. So there are what pre-operative expenses also which has come in Q3. Otherwise, the EBITDA margins are comfortable.
If you see your ad spends is 37% more than last seen a figure, and as percentage of sales also it's risen by 1.5%. Now you are a known brand and you have big stars advertising for you. Why the need of spending so much money on the ads?
No, you should look at ad and sales promotion expenses together, and actually as a percentage wise it has come down when you compare to Q3 of last year.
Okay, so how do you see the business environment now? Because the gold prices are at the highest level we have seen since last few weeks, and how do you see the demand scenario right now? Because of course right now is the wedding season going on, but how do you look at it?
So demand was extremely positive for Q3. October and November were excellent. December we had a small muted demand, especially because of the discretionary demand being affected due to the high volatility in gold prices. People take a pause, they look at where the gold price gets settled down and then start purchasing again. So January as we speak, everything is on track, momentum is back, footfalls are high, and we are extremely positive on the Q4.
You also added new 6 stores in India, and all are non-South based. Is it a conscious effort to expand?
So as a brand, we had the plan of our expansion is majorly going to be non-South driven because of 2 reasons. One, Kalyan as a brand started the journey from South India, and we have good market presence in the South. We are there almost in the Tier 1, Tier 2 cities across South India. Non-South, we have certain markets where we want to go and explore, and it is a conscious decision that our expansion should be majorly non-South driven. And again, non-South comes with a better margin, and that is how we are going to take it forward for the next couple of years.
So as of now, I think your total store strength is 169 in India and Middle East. Now, Middle East is a big market for you, and it's contributing your revenue growth by 24% this time at 641 crores. How do you see that market expanding, and any other expansion plans globally?
So Middle East, if you look at the total number of stores, we have 169 stores as of December 31st. That includes the Middle East. Middle East, we have 31 showrooms. So Middle East, as you said, the revenue is back, 24% growth in Middle East, and the momentum is extremely positive in that region. As far as expansion is concerned, our primary focus will be to expand in the Middle East itself. And we are launching our first franchised store in the Middle East in Q1 of the next financial year, and Middle East will be a majorly franchisee-driven revenue or franchisee-driven market in the next 3 years. That is our target for Middle East.
Okay. So just to understand the psychology of the buyer, are people buying in big bulks and big tickets, or people are buying small amounts because of the gold price, what we are seeing? How is the sales taking place?
So it depends upon the occasion for which they buy. wedding comes with a higher ticket size. There are casual purchases which comes with a lower ticket size, and when it concerned on the gold rate, actually customers come with a budget. So gold price will not affect the ticket size because they come with a particular budget.
Okay. So further on, what would be the guidance here on towards the margin, revenue, and on your spends?
So I will not be able to give an exact guidance, but as we speak, the first 3 quarters of the financial year has been extremely good. Q4, as we speak till February, things are positive. And if you look at our growth, we usually maintain a 5 to 6% of same store sales growth. And we will be adding new showrooms. And next year, we have a robust expansion plan. We are opening 52 new showrooms in the next financial year, the next calendar year. And that also will be a major driver for our revenue growth.
And how much margin improvement we can see? Because this time it's a little negative.
So margin, as I mentioned earlier, it cannot be because if the expansion is going to be majorly driven by franchise, and franchise margin comes, meaning it's a FOCO model wherein there will be a pressure on the gross margin, but on a PBT level, the margins will be higher.
Okay. On that note,